Financial Accounting Chapter 18. Introduction. Financial accounting is influenced by the environment in which it operates. Nations have different histories, values, cultures, and political and economic systems, and they are also in various stages of economic development. These national influences interact with one another, and in turn influence the development and application of financial accounting practices and reporting procedures. Multinational corporations operating in many countries might earn more than half of their revenues outside of the United States. Because of national differences, the financial accounting standards applied to the accounting data reported by these multinational companies often vary significantly from country to country. This has necessitated the demand for global financial reporting to improve multinational commerce. Language. The use of technical terms to communicate accounting information can lead to misunderstandings when the meaning of such terms is not fully appreciated by the recipient of the information. The discipline of translation studies suggests that full equivalence in translation between languages is rare. This suggests that the risk of misunderstanding is exacerbated when technical terms are translated into another language. This paper examines the implications of mistranslations of technical terms in the context of theories from linguistics, which suggest that language influences the way we think. It uses 3 examples of accounting terminology to illustrate these problems. It concludes that the choice of an inappropriate label in the translation of accounting terminology is detrimental to international accounting communication and creates problems for users and preparers of translated financial statements, as well as for researchers in and students of international accounting, and for those involved in harmonization and standardization of accounting. Accounting differences. This paper expands prior International Financial Reporting Standards (IFRS) accounting systems classifications to a broader set of 27 countries where IFRS adoption is a widespread practice, as well as the U.S. It examines the issue of whether a U.S. model of accounting that includes countries which have adopted IFRS exists. The results suggest a classification distinguishing between 3 groups of countries based on the similarity of their accounting practices: 1 Australia and New Zealand, 2 US-influenced countries, and 3 South Africa, Oman, and European countries. This study contributes to the literature not only by providing evidence of differences in accounting practices to a broader set of countries, but mainly by suggesting an economic explanation of the existence of accounting choices. In particular, economic proximity to the U.S. may be an important factor influencing accounting practices in some countries, even after IFRS adoption. Help by multinationals. Proper construction of the system transforms it from a simple reporting system into a smart data system that capable to provide real-time sensitive information, prevent mistakes, embezzle and improve the organization decisions on an ongoing basis. For international organizations operating in multiple countries, the accounting system can provide multinational and multi-currency accounting information in a variety of languages, according to management and organization needs. We provide consulting to international companies and assists in building the right system and the most suitable solution for any internal and external reporting challenge as needed. Increasing international harmonization. There is pressure for harmonization of divergent accounting practices, not only from the users of financial statements, but also from those who regulate and prepare them. Pressures come from the investors and financial analysts to facilitate investment and credit decisions. The financial analysts are of the view that international diversity in accounting practices has enough potentiality to destroy the international flow of capital. The investors are also putting pressure for harmonization as they desire that financial information should not only be intelligible, but comparable also. Increased number of multinational corporations on global arena also calls for increased harmonization. Lack of harmonization in different accounting standards developed by different countries also imposes financial burden on multinational corporations. Hennessy, who is chairman of Credit Issue, has observed that the cost of converting to U.S. accounting standards is at least $1 million for a major Japanese or British company. A benchmark for international comparisons. The organizational model of benchmarking of systems of management accounting of lean production is formed, and the content of its successive stages is described. Internal study and preliminary analysis of competitors, implementation of a long-term benchmarking program, selection of contractors for benchmarking, identification of benchmarking partners, implementation of an action plan aimed at achieving or exceeding the benchmark selected at the previous stages of the work. It is suggested to determine the effectiveness of the management accounting of the lean production of the manufacturing enterprise on the basis of expert estimates or independently through self-assessment. As part of the creation of a system for evaluating comparison objects, there were presented a matrix of advantages in choosing the method of evaluation in conducting benchmarking of management accounting processes, options for expert assessments of the state of management accounting, the scale of criteria for evaluating the usefulness of data, information of management accounting of economical production, for which the advantages in the choice of alternative expert assessments are highlighted.